Hey everyone, let's dive into NIO upcoming Q3 earnings report, which is scheduled to be released soon. Specifically, NIO will share its third quarter results on November 20th, right before the market opens on a Wednesday. In this video, we're going to walk through some expectations for these earnings and what they might mean for NIO stock. Let's focus on what's important here, the upcoming earnings. Now, if we look back at Q2, those results gave NIO a significant boost, with the stock responding very positively. The results exceeded many people's expectations, giving investors a lot to celebrate. Now, we're looking at Q3, which covers July, August, and September. During these months, NIO consistently delivered over 20,000 vehicles each month, a milestone that marks the company's strongest quarter ever in terms of vehicle deliveries. What does this milestone mean for NIO financials? Well, it's safe to assume that with these record-breaking deliveries, NIO quarterly revenue should be at its highest level yet. This is anticipated to be the best revenue quarter the company has recorded to date. So, how much better are we talking about? To give some perspective, NIO delivered 61,855 vehicles in Q3, compared to 57,373 vehicles in Q2. That's a difference of 4,482 additional vehicles in Q3, a notable increase that should translate to higher revenue than Q2. With deliveries up, revenue is expected to follow suit. Now, let's discuss potential revenue per vehicle. Although deliveries were up, it's worth noting that the incentive programs in Q3 were quite similar to those offered in Q2. For example, in Q2, NIO provided incentives like free NIO phones, and in Q3, they continued with incentives such as battery swap vouchers and 2 years of free NIO Pilot. Given the similarity in incentives, we might not see a significant change in revenue per vehicle. But the overall increase in deliveries should still drive higher total revenue than in Q2. A new factor this quarter is the start of deliveries for the ONVO model, which began at the end of September. However, ONVO contributed only around 800 vehicles in September, so while it's a nice addition, the immediate revenue impact from ONVO might be modest. Still, it's worth mentioning because these vehicles could potentially bring improved margins to NIO. The ONVO model is expected to have better margins than NIO existing models, as the CEO mentioned. In the long term, this could mean higher profitability if NIO can scale ONVO production and deliveries. As for profitability, it's a complex picture. The CEO hinted that, thanks to reduced incentives, NIO may have achieved some profit in October. However, profitability on a broader scale might not be here just yet. NIO is likely still allocating a significant budget to research and development, potentially in the range of several $100 million. This expenditure is crucial for product innovation and competitive positioning, but does impact the bottom line. Beyond R&D, Q3 was also the start of a ramp-up in ONVO production, which means additional operational expenses. While NIO began producing ONVO units in August, sales only kicked off in late September. So there are costs tied to producing vehicles that were not yet sold during the quarter. Additionally, NIO has been aggressively expanding its retail footprint, opening numerous ONVO stores across China in August and September. These new stores require sales staff, real estate investments, and operational costs, all of which will likely contribute to higher capital expenditures (CAPEX) in Q3. Thus, while revenues are expected to be robust, the added costs of launching and scaling ONVO production and setting up stores will offset some of these gains. Taking all these factors together, Q3 is shaping up to be a mixed picture. On the one hand, NIO record deliveries and anticipated revenue growth should create excitement. On the other, the costs of expansion, production, and store rollouts are significant and will weigh on profitability. Still, this level of growth in delivery numbers should be seen as a positive indicator for NIO long-term outlook, especially with the ONVO promising margins. Given the strong delivery performance and revenue outlook, it's likely that the stock could respond positively to the earnings announcement. Investors are always looking for signs of progress, and despite the costs associated with growth, the overall trajectory remains promising. I believe NIO investors will find reasons to be optimistic about the future based on these earnings. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.